Bitcoin is currently trading at roughly $95,000. Yet, if you look at the social sentiment across X and Discord, you'd think we were in a bear market. The Fear and Greed Index is flashing a 27, extreme caution. Usually, when Bitcoin is $8,000 away from a six-figure milestone, there are laser eyes and euphoria everywhere. But today, the air feels thin. This is the great disconnect of 2026. While the mainstream media focuses on the price tag, they are missing the seismic shift happening underneath. We aren't just looking at a simple price chart, we are looking at a collision between the old financial world and the new sovereign one. On one side, you have a massive institutional wall of money, over $57 billion now sitting in spot ETFs. On the other, you have a retail base that is exhausted, terrified by headlines, and liquidating their positions just as the smart money is opening their wallets. Why the panic? Because for the first time in Bitcoin's history, its price isn't just reacting to halving cycles or ETF flows, it's reacting to a direct criminal investigation into the Federal Reserve itself. This creates a reality check moment. If you are here for a quick 2x, you are likely going to be shaken out. But if you understand the why behind this $90,000 support level, you realize we aren't at the end of the bull run, we are at the end of the beginning. Today, we break down why the $100,000 launchpad is actually being built on a foundation of political chaos. We'll look at the data that shows whales aren't just buying, they are hoarding. Is this a bull trap or the last chance to buy before Bitcoin hits six figures forever? Let's cut the noise. To understand why Bitcoin is stalling at $92,000, you have to look at Washington, D.C. As of yesterday, January 12, 2026, the Department of Justice has officially opened a criminal investigation into Fed Chair Jerome Powell. This isn't just a political spat, it's an unprecedented constitutional crisis. The DOJ is investigating Powell's testimony regarding a $2.5 billion renovation of the Fed's headquarters, but Powell himself has called this a pretext. In his video statement, he made it clear the administration is using the DOJ to pressure him into cutting rates. This has put Bitcoin in a strange position. Historically, Bitcoin is a risk-on asset. It thrives on stability and low rates. But 2026 has brought about a decoupling event. As trust in the U.S. government's bedrock institutions, the Fed and the DOJ, trembles, Bitcoin is beginning to trade like digital gold. While gold is hitting new all-time highs of over $4,400 an ounce today, Bitcoin is holding its ground as the alternative exit ramp. The tension is this. President Trump wants aggressive rate cuts to fuel the 2026 economy, but Powell is standing firm on price stability, fearing a return of inflation. This feud is creating massive volatility. Traders are terrified that if Powell is forced out or indicted, the dollar will lose its remaining credibility. In that scenario, Bitcoin doesn't just go to 100K, it becomes the only liquid asset left that isn't tied to a political subpoena. We're watching the transition of Bitcoin from a speculative tech play to a sovereign insurance policy. The market is nervous because it doesn't know who will win this tug of war, but the math says that no matter who wins, more money will be printed to solve the problem, and that is the ultimate fuel for the next leg up. While the headlines focus on the Powell investigation, the on-chain data is telling a much more profitable story. As of January 10th, the number of Bitcoin addresses holding more than 100 BTC has hit a new all-time high. Let that sink in. While retail investors are panic selling their fractions of a coin because they're scared of a 5% dip, the whales are accumulating at record speeds. This is what we call a liquidity transfer. On-chain trackers like CryptoQuant and Glassnode are showing that Bitcoin exchange reserves are at their lowest levels since 2018. The coins are being moved off exchanges and into cold storage or institutional vaults. This is happening because the 2024 halving supply shock is finally fully manifesting in 2026. Miners are currently barely breaking even, and many are shutting down or being acquired by larger AI computing firms. This means the daily sell pressure from miners has practically evaporated. But here's the catch. Whale activity isn't always a straight line up. Some Bitfinex whales have recently been trimming their long positions, flushing out leveraged traders. This is the Wyckoff Spring, a classic market maneuver where big players drive the price down just enough to trigger stop losses and clear out the weak hands before a massive breakout. We saw this in early 2025 when Bitcoin stalled at 74K only to skyrocket to 112K shortly after. If you see a sudden, violent drop to $88,000 this week, don't assume the market is dying. Assume the whales are clearing the runway for the $100,000 takeoff. They aren't looking at the DOJ headlines. They're looking at the 20 millionth Bitcoin issuance coming in March. They know scarcity better than anyone.
Technically speaking, Bitcoin is currently trapped in a symmetrical triangle on the daily chart, with a massive resistance wall sitting at $95,000. This isn't just a number, it's a psychological barrier. Every time we've touched $94,000 in the last 2 weeks, the sell orders have poured in. Why? Because thousands of paper-handed traders have set their sell limits just below the 100K mark, hoping to beat the rush. However, the moving averages tell a different story. The 200-day EMA, exponential moving average, is currently acting as a rock-solid floor. Even during the DOJ news dip, Bitcoin didn't even sniff the bottom of its support range. The Relative Strength Index, RSI, is sitting in the neutral zone. This is actually very bullish. It means Bitcoin is resetting its momentum without losing its price level. Usually, a price rally to 90K would leave the RSI in overbought territory, signaling an imminent crash. But because we've been consolidating sideways, the market has cooled off without falling apart. If we see a daily candle close above $95,000 with high volume, the short squeeze will be legendary. There are currently over $560 million in short positions that would be liquidated if we hit $92,000, and that number doubles as we approach 95K. A break of $95,000 essentially turns the road to 100K into a vacuum. On the downside, we have a CME gap down at $88,500. Markets love to fill gaps. A quick wick down to 88K to fill that gap before a $10,000 move upward is a textbook Bitcoin move. The technical reality is that the coil is getting tighter. When this triangle breaks, likely by the end of January, it won't be a 2% move. It will be a 15 to 20% explosion.
So, how do you navigate this minefield? You need a 2026 battle plan that is based on math, not emotion. Step 1. Stop looking at the 1-minute chart. In this environment of headline risk, DOJ, Trump, Fed, the 1-minute chart is designed to make you lose money through overtrading. Shift your view to the weekly and monthly timeframes. When you do that, the $4,000 dips look like tiny blips in a massive uptrend. Step 2, watch the DXY, US dollar index. In 2026, the DXY is the master indicator. If the DXY starts to weaken because of the political instability in Washington, Bitcoin is the primary beneficiary. If the dollar drops, Bitcoin pops. It is that simple. Step 3, use the fear to your advantage. Historically, the best time to buy has always been when sentiment is below 30. We are at 27 right now. This is the maximum opportunity zone. Instead of going all in at 92K, use a dynamic DCA, dollar cost averaging strategy. Keep some dry powder on the sidelines specifically for that CME gap fill at $88,500. If we hit it, buy aggressively. If we break $95,000, hold your position and let the shorts fuel your gains. Most importantly, understand that we are entering the institutional era. The volatility is being manufactured to shake you out so that BlackRock, Fidelity, and corporate treasuries can buy your coins. Your goal isn't to outtrade a bot, it's to outweight the panic. The reality check is that Bitcoin at $92,000 is still undervalued when the alternative is a financial system under criminal investigation. Don't be the person who sells the bottom of a political news cycle. The 2026 Bitcoin reality check is this: the volatility you're seeing isn't a sign of failure, it's a sign of a system in transition. We're watching the birth of a new asset class in real time, and it's being born in a room filled with subpoenas and political drama. That is exactly how it was always going to happen. The window to buy Bitcoin under six figures is closing. Once we break $100,000, the psychological unit bias will change forever. People who thought $90K was expensive will suddenly see $105K as a bargain. Don't let a headline about building renovations or Jerome Powell shake you out of a generational wealth opportunity. Stay logical, stay grounded, and remember why you started this journey. If you want more data-driven updates as this DOJ investigation unfolds, make sure to hit that subscribe button. The road to $100,000 is a battle, but the data says we're winning.